Hello there. Halal Integrated Platform, or HIP, powered by Halal Development Corporation, is a networking platform that connects to global halal ecosystem, equipping your business with a competitive edge. As a HIP member, you can engage internal HDC stakeholders and external strategic partners within the halal industry. So, what do you get as a HIP member? Here you go. You get financial facility, market access, human capital development, business capability development, and halal industry support and facilitation. How does industry players can utilize HIP? As a buyer, you can search halal products through our HIP database. As a service provider or financial institution, you can engage with halal industry players. For government agencies, you can offer initiatives and programs. Hey, venture capitalists and investors can also seek for unlisted company to invest. For halal professionals, you can access our database for halal ingredient sourcing. Finally, manufacturers and sellers, join us to promote your products and get connected to global supply chain. What are you waiting for? Join us for free as HIP member. Enjoy opportunities and exclusive access and increase visibility in halal industry. Let's go!
Hello everyone, I'm Mizi, and today I'll be showing you on how you can register with HIP. Let's go! First, you need to register your account at hip.hdcglobal.com. Fill in your email, password, and don't forget to tick the box before you proceed. Click Get Started. Success! Next, fill in your personal details on the user profile page and click Update. Success! Most importantly, fill in all information of your company on the business profile page and click Update. Success! Don't forget to fill in the organization information and click Update. Success! Complete your products and services listing here so that your range of products is visible, and here is the example of a completed business profile. And we are done. Easy, isn't it? Register as HIP member and accelerate your business with HDC.
Malaysia's digital journey began more than 2 decades ago when MSC Malaysia was set up to transform the country into a knowledge-based economy. Since then, MSC Malaysia has contributed immensely towards the growth of the nation's digital economy. Our next step is to take the digital transformation from the corridor to the world. Introducing Malaysia Digital, a strategic initiative which will empower the rakyat, businesses and foreign investments. Malaysia Digital will also elevate the participation of Malaysians and local businesses in revolutionizing the world.
SMEs are the backbone of the Malaysian economy, contributing close to 40% of our nation's GDP. But every day, small and medium businesses struggle to secure Shariah-Compliant Financing to grow their halal business or bring their business towards being halal ready. That's why we created Funding Society's Islamic Financing to help businesses of all sizes to thrive and succeed in the halal market. Our Islamic financing solutions are designed to be accessible and convenient, allowing you to apply anytime, anywhere. No collateral required, with faster disbursement process. Through our suite of financing solutions, Microfinancing I, Business Term Financing I, and Invoice Financing I. Together, we can open the doors to halal financing for SMEs and help them achieve their full potential through a supportive and inclusive ecosystem. Enter the halal market with confidence through 100% Shariah-Compliant Financing. Islamic Financing Solutions by Funding Societies.
Hello there. Assalamualaikum. I'm Syilda Ismail. Welcome to our 9th episode of Tech and Tech Happy Live. We are live broadcasted through HDC, HIP, and MDEC's website, and also our media partner Malaysia Kini and Kini Halal. Okay, for today, I shall be co-hosting with Ruslena Ramli, Director of Islamic Digital Economy and Fintech of MDEC. And for that, let's welcome Lena. Assalamualaikum, Lena.
Waalaikumsalam. Hello, Shilda. Welcome
How are
to our
you?
9th episode. Good.
Alhamdulillah. Okay, before we start, Lena, could you share with us and and tell us again why are we doing this? You know, the series of campaigns speaking to founders, to startups in the Islamic digital economy sphere, throughout this year. Lena.
Okay. So, recap to MDEC's Malaysia Digital MD initiative, which was announced last year. We identified 9 promoted sectors. So one of the 9 is the Islamic digital economy. So these 9 promoted sectors will power MDEC's Malaysia digital initiatives in making Malaysia a successful digital nation. So key to our success, of course, the heartbeat to our digital economy is our technology companies, which MDEC foster in terms of nurturing, business matching, and hoping to make them one day, inshallah, a global champion.
Inshallah. Okay. All right. For that, Lena, as you know, in an era where technology and finance intertwine, P2P lending or peer-to-peer lending has emerged as a disruptive force in these recent years and revolutionizing traditional lending system or the financial system. But what happens when you infuse the principle of Islamic finance into this innovative technology or landscape? So exactly today, we are going to explore and speak to the person who is very, very much specialized into this. So we will delve into the world of peer-to-peer lending through an Islamic lens together with Chai Kian Poon, who is the Country Manager of Funding Societies Malaysia. KP.
Hello.
Hi, KP.
Hi, thanks for having
KP,
me.
congratulations on your launch Islamic Finance Solutions for Entrepreneurs recently.
Yep. Thanks a lot. It has been a long time coming, and I'm grateful that we are finally able to go live with our comprehensive suite of Islamic financing solutions.
Okay, KP, tell us what is P2P lending, and of course, elaborate on your recent launch. How does it differ from the P2P Islamic financing in the market? Why suddenly having a Sharia-compliant suite to be part of your offerings? And perhaps also tell us and enlighten us on the funding societies. KP.
Yep. Maybe I will start by giving a bit of intro about funding societies and then moving on to our aspiration with regards to Islamic financing solutions. So Funding Society is a regional SME digital financing platform. We are currently operating in 5 countries: Malaysia, Singapore, Indonesia, Thailand, and Vietnam. In Malaysia, we are regulated and registered with the Securities Commission Malaysia. And essentially, we provide financing to underserved and unserved businesses funded directly by retail, high net worth, institutional investors. And I think and these days, government agencies are also participating as part of the funders on our platform. I think with regards to Shariah-Compliant Financing, I think we have always wanted to do it since day one. But of course, given that, we started off with something that's a bit with more simple products as a start. But I think it has always been part of our roadmap. Actually, we wanted to launch back in 2019, but unfortunately, just before, I think just as we were prepared to launch, COVID hits. So I think like any startups, I think we decided to stabilize the business, focus on existing franchise, and hence delayed the plan quite a bit. But I think it has always been part of the pipeline. Hence, I think when things have sort of stabilized, business is also growing again. That's why we decided to go all out. So instead of just launching one product, we decided to go and launch the full suite of Islamic financing products. And I think compared to some of our peers in the market, whether locally and regionally, and our key value proposition is basically the breadth of products, financing products that we have for MSMEs. I think a lot of our peers, they typically focus on one specific segment, but then they go deep. I think for us, our vision has always been to serve as many MSMEs as possible, hence offering the whole suite of product, starting from business term financing and then going to account receivables and payables financing, and then something that is very close to our heart is obviously microfinancing
Thank you so much, KP. All right, Linda, as KP mentioned, the Islamic P2P lending sector has also, experienced significant growth, even though in the COVID years. More platforms are emerging, offering diverse and also unique financing options, to cater MSMEs and, financing needs of individuals, also businesses. So perhaps coming from MDEC, what are the supports to support the growth and also to internationalization of Malaysian fintech companies specializing in the Islamic financing alternative? Are there any specific programs or initiative in place to help them?
Okay, so before I answer Shill's questions, allow me to set the context in terms of the landscape. Kita bercerita sikit. So SC issued the guidelines for P2P way back in 2016. And I think, I have to give it to Banegara and also IC. They have always been a few steps ahead in terms of what are the needs of the market players and also the needs of our micro SMEs and SMEs. So thank for their this forward-looking initiatives, we now have close to about 10 ECF players. 2 are Shariah compliant. In the P2P space, there are, I think here I mentioned here 11 fintech players, 7 are Shariah compliant. And because of the pandemic, as you know, in any adversity of market, liquidity will be the first to be pulled from the bank, right? Because they want to protect themselves. And thank God for the P2P and ECF, our micro SMEs and SME players had an alternative funding platform for them to raise financing, because as you know, people always need to grow. They need capital for their working needs. So if you were to read the SC annual report, to date, there is close to about 3 billion fundraising that has been raised through the alternative funding platforms. Alternative funding platforms include P2P, ECF, as well as the PE and also the VC space. Of this 3 billion, 1.6 or 1.58 billion comes from P2P. And Funding Society is one of our shining stars.
Rising star.
Rising
and shining star.
I was just grateful that we can play our role in helping the MSMEs.
Yes, because of their focus on Shariah compliant. And I think that is key in support of further fostering Malaysia's global positioning for not only Islamic fintech, but also for Islamic digital economy.
Yeah.
So some of the programs that we want to see moving forward together is to, because I mentioned earlier, IDE is a potential pemangkin initiative that we want to push across. Pemangkin means catalytic and really moving in the industry forward and putting Malaysia on the global map, because IDE, my personal belief, is a global play. There are tremendous opportunities because we have always been the first market mover, not only in the banking side, but also on the Islamic capital side. And we want to see more of that in the P2P, ECF, RMO space, right? Regulated market operator space. So more to come. I will share more as we dwell deeper into the discussions that we have with KP. Back to you, Shil.
Okay. All right. Thank you, Lena. So coming back to your current launch product, what are the key features and USP and the benefits of participating in the Islamic P2P lending for both balancing the investor and the MSME, the borrower and the lender? KP?
Yep. So I think rightly mentioned, so we are a platform. So we serve both sides of the equation, both the MSMEs and also the investors or funders on our platform. Now on the MSME side, I think the key point is always access to financing. So we complement existing financial institutions. So I think the keyword is complement. I think we don't compete, right? So for SMEs, they are able to get bank financing. I think they are most welcome to get it from the bank. I think where we focus is basically the segments that are currently not very well served by the bank for a variety of reasons. So typically, I think banks, given their unit economics, they typically focus on larger ticket financing, longer term, and hence they require collateral. And I think a lot of younger and small and micro SMEs, which is our main target segments, they will not have all those collateral to provide. And also the 3-year financial records and whatnot. And that's where we come in, leveraging on our credit assessment model, plus some of our partners' data to sort of assess them differently from what the traditional FIs used to do. Now, on the funder side, how we have positioned it is basically short-term fixed income investments that is slightly higher yield than the other asset classes, and is stable. So given that most of our financing are short-term, so typically on average around 6 months, maximum 18 to 36 months. Now in this short, in the short, with the short repayment period, the SMEs will always be there to make fixed repayment to the investors. So regardless of what happened to your stock market, what happened to your bond rates will fluctuate on a day-to-day basis, SMEs will still be there to make your repayments over the next 3 to 6 months. So our key value proposition, to summarize, is basically short-term, fixed income, and liquid investments.
Are there any fixed industries that you are targeting, KP?
Yeah, so we are actually industry agnostic. So we try to serve all the industries that we are able to. But of course, I think in line with the distribution of the Malaysia economy, a lot more of the SMEs are actually in the wholesale and retail trade segments, followed by manufacturing, construction, and whatnot. But I think what we are trying to do a bit more is basically to work with SE and some of the agencies to try to do a bit more in the agriculture segment. So historically, we are, I think P2P is not very strong in the agriculture segment, particularly primary agriculture, because of the risks involved, and obviously some of the crops also require longer tenure. But I think of late, I think especially also in line with the whole national agenda of food security, we are working a lot more with partners to sort of leverage and tap on their expertise and also the sort of data that they have to serve a bit more in the agriculture segment. Of course, agriculture is, agro-food in general is very wide. So it ranges from upstream, midstream, and downstream. So the mid and downstream, I think we are already serving well, and we'll continue to serve them. But I think what we are trying to do a bit more is in the primary segment, also in line with the national agenda.
Okay, thank you so much, KP. All right, Lena, from MDEC's perspective, and especially from IDE, what are the challenges or obstacles are faced by Islamic P2P lending platforms? How are they being addressed?
I think let's just leave it agnostic for the time being. I think one of the key challenge, and this touches across all funding platforms, is your target markets is your micro SMEs and SMEs, right? And now with the digibank coming on board, their focus will be the underserved and unserved. So on average, KP, correct me if I'm wrong, most of the profit rates, it ranges anywhere between 12 to 15%. Yes, it is a little bit higher, but high risk, high return, right? So we're trying to see how we could further facilitate competitive financing rate. And this I am very, very aligned with KP in terms of how do we add value in further facilitating the growth of micro SMEs, but not impinge them with so much financing rate, right? So currently, right now under SC, you've got the MySafe program. So MySafe program is like a matching fund, matching funds of funds. So if funding societies agree to provide say 10,000 to micro SMEs, the MySafe will then match with another 10,000. This will then bring down the overall financing costs. Another platform that we are collaborating, of course, is with Bank Negara as well, because financial awareness, further facilitating that 90 billion funding gap to micro SMEs is key across all government agencies and also the regulators. So they have got so it's called iTekat. So iTekat is where you blend. It's a blended financing platform which allows zakat money from the banks or social financing mobilization of funds in support of all these micro SMEs. So the platforms are there to see how we can further strengthen the value proposition. A lot more can be done to further bundle zakat monies, even looking at cash walk-up as well. So Kian Poon and also other P2P players that we have specific to the Islamic would stand at a better advantage because they are already operating in this Islamic digital economy space. You then have got the option to leverage on the zakat and wakaf that is already in existence. As you know, Selangor alone in 2021 close to about 1 billion zakat collection. Some of these micro entrepreneurs could actually be asnaf players. So how can we help them in support of them growing to become from a penerima zakat to become a giver of zakat, right? And that is the journey that everybody should shoulder, because we bear that responsibilities to help our fellow local Malaysians. And we're hoping to see how we can champion specific initiatives, and that is what this Pemangkin story is about. Without letting the cat out of the bag, we are working with funding societies and two other core government agencies in support of realizing alternative credit scoring. Okay, what is
Okay.
this alternative credit scoring? So I mentioned earlier the 90 billion funding gap. Why is there a funding gap? Because our micro SMEs don't exist in traditional platform. They're not there in Sitosi Kris because they may not even have a business registration or a business account, right?
Yeah.
They operate on their personal capacities. You know, for
Yeah.
example, during the pandemic, I lost my job. I may have ended up being, say, peniaga
Uh,
frozen food.
Kedai cake or
I
something
would
like that. Yeah.
work back from home,
Yeah.
right? So how can we use scoring or the historical track record, say for example from your Do It ID, your national QR code. You know the national QR code, sometimes if you go to beli Ramli burger tepi jalan, you just titik, you know, there's a QR code. So the data points in all those reside in a lot of this fintech of data or mobile data. These could potentially lead to creating a credit history of that peniaga frozen food, because she would have been paying her mobile phone, she would have been paying her cukai pintu, she would have been paying her utility bills. That shows her credit worthiness in terms of a track record, right? She may not exist in Sitoki Kris, but she could exist in other data points, and that is what we want to try to see in providing the alternative score. So all these leads to the open architecture, or what we say open banking and sharing of data. So that's happening right now, and inshallah we're hoping to see whether we can launch something big, hopefully by August, September, inshallah, this year. And funding society is one of our core catalysts in providing, in crystallizing these opportunities for fintech companies. Yes.
Okay, I'm looking forward to that, Lena. All right, coming back to the Funding Society services and offerings, I've received so many feedbacks, and when we talk about P2P lending, and also ECF, are there specific risk management? You know, some of them will say, legit ke, you know, and also they will say, boleh bayar ke, how to pay back, and all those things. KP, are there any specific risk management mechanism in place to not only protect the lenders but also the borrowers? Can you enlighten us?
Yeah, KP, before you start, can you also touch on your initiatives in bringing down the overall financing costs?
Yep.
Okay.
No, I think what Lena has mentioned earlier is exactly one of our key focus area, right? Because I think liquidity is plenty. I think maybe not so much these days, since some of the central banks started tightening, but generally money is there. But I think to basically double click, I think expensive money is there. So I think what we are trying to basically source is basically lower cost funding that we can then pass on the savings to the MSMEs, right? Because historically, when we talk with private investors, whether retail, high net worth, or institutions, it has always been at least net of everything, net of tax, net of fees, net of NPL, is around 5 to 8% per annum, right? So you add on the fees, which is a small component, you add on the NPL risk, and then that goes to 12 to 15% per annum that Lena was mentioning about. So one of our key focus has always been trying to look for the source of funds that maybe is a bit more social impact oriented, a bit more developmental oriented, which they then don't mind taking on lower sort of hurdle rate, which then the savings can be passed on to MSMEs, right? I think the other key piece is basically how do we then, I think as Lena has sort of alluded to earlier, how do we continuously leverage on alternative data that's available in the market to sort of be able to credit risk price the MSMEs more accurately. And these are some of the other data points that Lena has mentioned, right? Whether it's payment data, partners data, and whatnot. And by doing so, by developing a credit scoring based on alternative data, we will be able to lower the NPL, we'll be able to risk price more accurately, and then again, price the SMEs better, and then pass on the savings again, right? So these are two key initiatives that we are doing. in terms of how do we reduce the cost of financing to these MSMEs.
Yeah.
Okay, coming back, the risk management, KP.
Correct. Oh, so actually, I've sort of started to shared a bit on risk management earlier. So all the MSME that comes to our platform, we will conduct our risk assessment on them, and the sort of risk assessment that is done is also unique or customized depending on the segment of the MSMEs, right? So I think micro, early, young MSMEs, which contribute a big portion of our book, we cannot use the traditional assessment. So we'll typically try to leverage on partners' data and also bank statements to try to risk score them, right? And and a big part of our customers is actually coming from this segment because they are most underserved, right? So 50% of MSMEs that get financing from us, we are actually providing them their first business financing. So they may have some personal loans and whatnot, but when it comes to business financing, we are the first. And we also serve a lot of younger SMEs. 50% of our SMEs are actually below 3 years, which typically are not sort of within the risk appetite of the traditional FIs, right? So on one hand, that's what we do. Now, on the other hand, we also provide the necessary disclosure to investors for them to make their investment decision, because I think ultimately it's an investment. There is risk involved. So I think we do provide necessary information to sort of allow them to make informed decisions. Now, on the MSME front, I think one key thing that we do a bit differently from some of the peers in the market is that we don't actually disclose the name of the MSMEs who take financing from us. And I think there's two reasons why we decided to do that, right? After balancing the pros and cons. I think number one is business failure is real, right? So there are times where, for whatever reason, you are not able to make repayment or you need to delay payment. I think we don't want that we don't want to have any instances where actually some investor actually go and harass the SME. So I think we want to keep the identity private. I think while as much as possible, we provide sufficient information for investors to make decision. They don't actually need to know the name of the MSMEs, right? Because there's no value add. At least in our opinion, there's no value add by knowing the MSMEs. I think the other thing is I think one key thing that we do is while we want to extend financing, we also ensure that to the extent possible, we provide right-size financing, right? To the extent possible, we provide right-size financing so that we don't don't put them in a situation where they are over-leveraged and then they have difficulties making repayment subsequently. I think one thing we realize that when it comes to businessmen, obviously when their business opportunity, they want to go, right? So they'll obviously come to you and say, hey, you know what, I have this business opportunity, I want more financing, can you give it to me, right? But I think for us, we also need to make sure that the sort of financing they granted to them is right size, right? So that they always have the ability to make payment to the extent that we can.
Okay, thank you, KP. Lena, could you provide us, the insights into the future of direction of Islamic financing alternative in Malaysia? What are the key areas of focus?
Yeah, so before I go there, I've got a question for KP. So when you talk about specific risk management, right? So how do you manage your MPLs?
So we basically have our own credit assessment process. That's again differentiated across segments. And I think the other thing that we do is we try to work with partners. I think partners are actually capable of providing a lot of alternative data for us to risk score on. The other benefit of working with partners is we can try to ring-fence the funds that are intended to make payment so that SMEs have sometimes people don't have discipline, right? So that at least payments that are meant to make funds that are meant to make payment to the investors, we basically work with partners to try to ring fence that, meaning to say, let's say for an invoice financing facility, right? So when an SME sell to a particular customers, especially bigger corporate, usually they need to give credit terms, right? Let's say 60 days, 90 days, 120 days. I think what we do is we try to work with buyers in the ecosystem to finance this kind of SMEs, which are supplying to these buyers, right? The other one thing that we try to arrange is that when SME come to us with invoices, we're able to extend financing to them. But when the buyers make repayment, we actually try to arrange with the buyer so that the payment is directly made to FS, given that we have already financed the invoices. And then after deducting the principals and the necessary profit rate to investors, we'll then give the balance back to the MSMEs. So the key advantage of this is that we help to enforce discipline so that the funds are not misused for other purposes.
Yep. But also another thing that is to me really good with regards to P2P is they take that opportunity to handhold the micro SMEs. So correct me if I'm wrong, KP, they are like a milestone or trigger. So assuming they were supposed to pay 2-3 months, right, and there could be any potential delays, these hand holding sessions gives you foresight on what's happening to their cash flows, and you would then provide facilitation. Okay, this is how you manage your accounts, this is how you manage your cash flows. And I think that's really, really key as you build a community of a stronger micro SMEs, because they may not be ready to take on, say, 100,000 financing, but they may be ready to take on 5. And for funding societies, they want to see their customer base grow from 5,000. Okay, now because I've already teach you in terms of how to manage your cash flows, you can now generate your own financial statements. You know how to manage your cash flows in and also your overheads. Now I can groom you to become the next cohort that can, now be eligible to secure 100,000 financing. And that's what government agencies want to see, Bank Negara and SC, this growth of journey of micro SMEs being a stronger entity and eventually become an SME, right? So this is key in the entire financial landscape ecosystem that we're talking about, and how everybody has got a responsibility to play in. Yeah. So do you want to add to that, KP, before I answer her questions?
Yeah. So we generally, I think as shared earlier, I think we generally try to provide right size financing to MSMEs to the extent that we can. And okay, we have been operating in the market in Malaysia at least since 2017, and a lot of our early borrowers are actually still with us. And I think over the years, I think as what Lena has mentioned, we actually do see their business growth, and hence we are able to extend our financing to them, increase the facility that we extend to them over time. And in fact, a lot of them are actually now bankable customers, but of course they are still with us because I think there are certain other products that we can offer them. So for instance, right, one of the SMEs that we first served in 2017 is basically a vegetable and fruit wholesaler that sells to restaurants and whatnot, right? So they are also Halal certified recently, which really leads to a boom in their business, right? So I think a lot of the halal restaurant chains can start also buying from them, right? So when they are with us 2017, we gave them a 200,000 term loan facility, simple. And then over the years, we have seen their revenue growth. We are able to actually extend additional facility to them to support their business growth, right? I think today, their facility with us is around 1.5 million ringgit.
Wow, and they started at how much?
Over the 200,000. So good growth over the years, and particularly in during COVID period, right? Because where they also pivoted their business a bit, so supplying directly to consumers and whatnot. But I think more recently, quite happy that they finally got the Halal certification. So they are now actually supplying to a lot of chain restaurants. They are able to also buy from them.
Yeah. So going back to your question, right? The future direction of alternative financing, this is it. This is the future.
This is it, yeah.
More and more. And micro SMEs, how much are there? I think more than 1 million, right? In terms of the number of micro SMEs. Is it correct?
Close to 1 million.
Yeah, close to 1 million. So how can we further onboard or inculcate values in support of building a stronger society of micro SME? So of course, the first point of entry, which is through the P2P and ECF, graduate them to become future funnels for traditional banking solutions, right? So that KP can then now focus on the other micro SMEs that have yet to now build. So it's building the ecosystem for them to be able to tap into the alternative, and eventually grow them to become bigger. And as a nation, this is how we want to help digitize each and every one of them. On the aspect of Jakim, we are collaborating, inshallah, and we're hoping to see how we can onboard more of those partnerships and collaborations in strengthening more players for the halal space as well. Going to your other sessions, which is on the focus and development. So last year, I think it was in October 2022, so SC announced another batch of opening of licenses. So in addition to the 7 that I mentioned, sorry, the 10 fintech ECF and also 11. So I think they're looking for more specific to Sharia compliant solutions only.
Easy, isn't it?
Yeah.
Okay, go ahead. All right. Okay. Well, I understand that we have some questions. Natasha, would you like to put the questions on board? Okay. Sorry, I missed the earlier part of the session. May I know the alternative financing would interfere with the way our MSME do their business? That's a good question.
May I
Perhaps
know if
KP or yeah.
Yep. No. So we don't interfere in the way the MSME run its business. But I think there are certain products where we would want to sort of. Okay. So I think long story short, we try to put in the necessary mechanism to ring fence the payments
Okay.
from your business, and this will also reduce the risk to investors, and then we can price it lower accordingly. But we do not interfere with the way we run your business. In fact, most of the time, even when we work with partners, we try to follow the existing SOP or business practices, so that it becomes sort of embedded within your usual business practice, rather than trying to force you to do things a bit differently. Because I think running a business is hard enough. I think we don't need to come in and
Yeah,
introduce extra
yeah,
burden for you.
yeah, betul. Yeah. All right. Okay, KP, again, what steps are taken to ensure transparency and accountability in Islamic P2P lending in your platform? And I understand that it's 100% digital, right? In terms of for them to process in terms of documentation, etc., etc. KP?
Yep. So I think on the investor side, I think it's quite straightforward. So I think whatever information that we have, we actually put it in a simple info memo, and then we share it with our investors for their informed decision making. But I think on the SME side, there are several things that we have done as well. I think but before that, going back to the point where it's 100% digital, yes, as MSMEs can actually apply for their financing with us end-to-end digital without actually talking to anyone. And we only have one office in KL, so there are also no branches for them to visit. But having said that, I think we are cognizant that a lot of the MSMEs, at least in this part of the world, but frankly, I think it's the same everywhere, where they are still a bit more offline, and they do need to see somebody for them to ask questions, make decisions, and whatnot. Ultimately, it's a financing, right? It does comes with certain obligations to make repayment on the business side. So I think for those cases where they need to talk to somebody, we do have a sales force to basically augment the digital journey. So I think a lot of times, fintech, people think it's just all digital, but I think in reality, that's not the case, right? We also need to be able to reach out to customers where they are in a manner that they are comfortable. But I think subsequently, we try to bring them online. I think this is what we have done over the years. So for instance, we meet SMEs online, we grant them a facility, but subsequently when they need to submit invoices for drawdown, they actually have to do it digitally via our supply chain financing platform. So I think that over time build habit, right, that they are comfortable transacting digitally and whatnot. I think in terms of transparency, all the necessary fees that we charge are actually shared with the SMEs upfront, and it's also all on our website as well. I think one particular thing that is also good from a Sharia financing perspective is there's also a lot of emphasis on transparency, right? So for instance, all our products have to be vetted and approved by the Sharia advisors and also by the SCICM department. And that includes all the relevant charges that we can charge, right? Hence also ensuring that there are no unnecessary charges to the MSMEs.
Okay, thank you, KP. Lena, perhaps, can also enlighten us, what kind of resources or support does MDEC provide to entrepreneurs, to startups interested in venturing into Islamic fintech, or perhaps into a P2P lending platform? Are there specific funding opportunities or maybe mentorship programs available from MDEC IDE?
Okay. So what MDEC does is, I think we play a very important catalyst role in support of nurturing our fintech companies. So not only on the business matching, but also the funding facilitation. So we just recently closed on the 1st of June 2 grants. I don't know whether Funding Society tried to apply for our Malaysia Catalyst Digital Council, our MDCG. A lot more will be dished out in the second half of the year. So we're hoping to see how we can further facilitate our technology companies to become stronger in their expansion of their businesses. I think key is also to facilitate business connectivity. So I think was it early this week, KP, that you dialed into our BSN call for partnership and collaboration. So as much as possible, and I tell this to all our ecosystem players, whether it's the DG banks or the traditional banks, your takaful operators, don't try to reinvent the wheel. We already have got successful technology companies that are ready to offer their solutions, and they need scale, right? Our 30 million Malaysians are not going to get this unicorn. So we need to help facilitate business opportunities for our domestic Malaysian companies. Of course, as much as possible, we also want to invite, the best of the best of technology companies from across the world to also be part of our digitalization journey. So and I tell this to our founders, and I mentioned this also last week with 2 weeks ago with Ray, right? What is relevant technology today may not be relevant tomorrow. So how can funding societies continue to expand their breadth and depth and the solutions that they provide, so they are always at par with what's happening in the world? So when you look at, machine learning, be it, artificial intelligence, alternative scores, we're always proactively thinking out of the box on how we can further strengthen the value proposition that we give to our local rakyat, not only to the households, but also to our businesses, our micro SMEs and SMEs, as we together build this nation to become a successful digital country. Yeah.
No,
Okay,
I
thank
think
you.
we are an existing beneficiaries of MDEC grant. I think so grateful for that.
Yes.
All
Okay,
right.
what about the funding facilitation? You maybe want to add
Yeah,
a little bit
highlight
more.
on it. Yeah.
Yes, highlight
Sorry, which one is this?
with the business matching bit.
Oh yeah, for sure. I think over the past years, I think even 2022, I think the MDEC Lena and the team has connected to us to quite a few folks. I think the more recent one, obviously being the BSN one. But I think there are also several corporates and banks that I think the team has facilitated discussion on. And I think for us that is key, right? So uh, I think our approach has always been if and that's why we work closely with MDEC and also some of the government agencies. We need somebody to help us connect to some of these bigger corporates, and then after that we can be evaluated on our own merits, right?
Yes. And then, so again, as technology companies become MD, they get that recognition. For you to become MD is not senang-senang, okay? It's not any talang-talang company can become MD. You will need to have track record. Who are your shareholders? Are you in this for the long haul? Because for you to build your fintech companies to become sustainable, that is a lot of hard work that's involved. And KP can tell you this, and explain the challenges that every founder, CEOs are having in support of promoting themselves. So how do they differentiate themselves with other P2P players? Like I said earlier, under ECM ada 10, under P2P ada 11, and the market is opening up. So everybody has to be on their feet in terms of their value proposition and the products and services that they offer. So what MDEC does is to see how we could further facilitate. So each and every one of them will have their own strength, right? Not all are the same, right? So, and how can we further strengthen their value proposition in support of connecting and integrating that solution to what is needed So we are the aggregate. I would like to think that MDEC is the aggregator of all problem statements across all the various sectors. So the great thing is we have a helicopter lens of what's happening across from Bank Negara to SC to other government agencies. And because we are, I would like to say, intimate with our technology companies, we know what their needs are and how we can further strengthen that connectivity. So, and this is what this journey is about together with our IDE companies, also our fintech companies as well.
Okay, thank you, Lena. Okay, for the benefit of our HIP members and also our micro SMEs in HIP, perhaps KP, it's basic questions like what are the documentations needed for them to apply for your funding? And also a little bit more on the role of profit sharing in Islamic P2P. You know, perhaps you can elaborate on the profit distribution mechanism, you know, that benefits the lenders or the borrowers.
Yep. I think so. For us, we have different products because we serve all segments. So we have we serve sole prop all the way up to unlisted public companies. I think these days we are also allowed to serve listed companies, but I think we haven't had one yet. I think on the other hand, we serve SMEs from micro, small, medium, all the way up to sometimes larger enterprises. But I think in general, for micro SMEs, which is something that's very close to our heart, right? So this is a segment that we deliberately want to explore, given that it is really the segment that need help the most. So for this product, actually, we only need 2 documents to apply. One is two documents to apply plus consent to pull information from credit bureaus. The two set of documents that is required is basically the directors and proprietors IC. This is essentially to do AML, KYC checks, right? The other set of documents is basically bank statements. And this is all that is required for you to apply financing from us. In fact, if you are working with some of our partners, you are also able to provide alternative data to us to apply for financing. And depending on the sort of amount that you're looking for, you may not even need bank statements. So essentially, give consent to the partner to share data with us, and then your ICs. And that is all that is required. I think on the Islamic principle, so we work very closely with our Shariah advisor, Mashraf, to basically roll out the whole product solutions. So currently, I think our product is probably a bit, is the more straightforward. So it's Tawarruk, based on Kafala principles. But I think over time, obviously, hoping to sort of innovate a bit more, working together with Mashraf and some of the other ecosystem players. Particularly, as we try to see how we are able to channel some of the wakaf or zakat funding to those that require it the most.
Okay, we have been speaking and discussing for almost 50 minutes already. Okay, this is the last questions. Perhaps, Lena, you can give some... Oh, okay, we have some questions here. Hi, KP. From FS perspective, in case of default, what steps are taken to recover the funds and how does the lender's interest protected? KP, go ahead.
Yeah, I think the first thing first is I think we engage very closely with our MSMEs. So I think there are automated reminders that is sent to MSMEs to remind them on their repayment schedule. I think because people are very busy running the business, sometimes it does slip off the mind. So all those are in place. But I think not only that, right? We also encourage businesses to come to us early if they do foresee potential delay in payment. So, for instance, if they know that this particular buyer is going to pay them 30 days later, so do come to us early, and then we can see how we are able to sort of do a deferment program so that you can pay later. But of course, I think in the principles of risk sharing, right? So they may need to compensate the lenders a bit more, so the additional 1 month of profit so as to be able to the principle of fairness. I think in the worst case scenario, we will also see whether there's how do we restructure the repayment terms for the MSMEs, provided that we are able to ascertain that their business income are really affected for one reason or another. So, for instance, they are able to show to us that, hey, my business was affected for whatever reason. Let's say flood, right? So I think probably 1 or 2 years ago, there's a floods that resulted in many
Strike, yeah.
businesses are
Yeah.
not able to operate. So I think if you're able to sort of substantiate that, hey, actually my business income has been affected and it's been down to 50% and whatnot, we can actually work out a payment plan for you, so that you are also able to, rather than like just taking legal action and whatnot and then you're not able to operate, we actually try to allow the businesses time to nurse their business back to normal, and hence they are able to make repayment to the investors or the lenders. And these are some of the mechanisms that we do very closely in terms of collection and recovery activities to try to protect the interests of the lenders. But of course, if all else fails, we will also be able to take the necessary legal action to recover the funds. But that is obviously last resort, right? Because the first resort, the first approach is always try to see how do we rehabilitate the business so that they can continue to serve the amount that is due to the investors.
Okay, so before we bid farewell, perhaps Lena and also KP, your last words on Islamic funding facility.
Okay, so this is the
alternative. This is the pick. Yeah.
So this is I always pitch this to all my founders. How can we make you Malaysia's Sharia unicorn? Because there is none in the world yet. So in providing opportunities, so I said funding opportunities in terms of the facilitation. We're looking at business matching opportunities. Market access is also key. So in MDEC, we've got a specific division called digital exports, and they run numerous programs throughout the whole year. So looking at opportunities in terms of how we can further expand presence of our technology companies across Malaysia shores is important. Great thing is Funding Society already have got a market presence in Indonesia, right? And further expansion of that will help further grow their business to hit that 1 billion for you to qualify to become a Sharia unicorn. And the opportunities are there. To me, I think the world is our oyster. Is how we can further help one another in understanding each other's needs, and further put a strong value proposition in growing that across all sectors, not only for local Malaysians, but also to potential customers that are in need of what Funding Society requires, right? KP, your last word.
Okay, your last word, your finale words, KP.
Yeah. No.
I think.
No. So I think obviously I think going back to the whole reason why we want to offer Sharia financing solutions, right? Sharia financing, Islamic financing proposition. I think obviously also I think besides supporting the national agenda, I think towards at least what we see is there's also a real business case behind it, right? And I think hopefully this will also encourage some of the other startups to take the leap if they are not already, to provide a Sharia propositions to their customers, and whether it's financing and what other segment, right? So at least for ourselves, it has always been very clear that given the development of Islamic finance in Malaysia and our leadership, there is a lot of Islamic or Sharia liquidity in the market that we are able to, that we want to tap into. So I think, for instance, we recently, I think there are a few agencies that have issued RFP to basically also trying to channel funds through alternative segments to basically help MSMEs as well. Right? And I think one of the prerequisites for us to actually participate in all these RFPs is basically you need to have Sharia finance, Islamic finance proposition. So if you don't have, you can't even do it, right? And I think very fortunate that I think we launched at the right time. I think we offered our solution at the right time, so we are able to participate in some of those RFP. Also quite fortunate that we are awarded one of the RSP. So I think we should be announcing some good news soon. I think you can watch this space closely. But I think that's on the investor side. But even on the funder side, I think historically we have always received questions like, do you have Sharia financing? Sharia financing, right? I think at that point of time we don't have. So I think when we answered no, naturally they won't even apply, right? So that means there are these whole segments of customers that you are not able to tap into, and this is the reality, right? So we have really go to market. I mean, we started doing soft launch since last year, but I think we started going full out this year after the launch. and and the results have been very encouraging in terms of tapping into these new segments. So we realized that with Sharia products, our social media engagement rate is actually much higher than what we used to have. And I think there are also a lot more customers that we traditionally are not able to serve are also starting to come in. So I think obviously there are real business reasons why startups or even more traditional businesses in general should start looking into these segments.
Yes,
Okay, thank you so much, KP. Congratulations. All right, okay. So thank you for joining us on today's talk show discussing on Islamic P2P lending, and we explored the concept of Islamic finance in the context of P2P lending, and of course it aligns with the Sharia perspective and principle. Okay, on that note, for those interested in Funding Society's investment notes and financing offering, you can log on to www.fundingsocieties.com.my. We have displayed it on our crawler. And for HIP members exclusively who are interested to get Islamic alternative funding, we're also collaborating with Funding Societies. Be sure first to be our HIP member and register as a HIP member, hip.hdcglobal.com, and we'll funnel your inquiries to Funding Societies. And okay, for that, I would like to say thank you to Lena and also KP for being with us in our 9th episode of Tech and Tech. HIP Live. Thank you, Lena. Thank you, KP, and see you again.
Thank you for having us. Thank you.
Thanks, KP.
Bye-bye.
Thank you, KP.
Hello everyone, I'm Mizi, and today I'll be showing you on how you can register with HIP. Let's go! First, you need to register your account at hip.hdcglobal.com. Fill in your email, password, and don't forget to tick the box before you proceed. Click Get Started. Success! Next, fill in your personal details on the user profile page and click Update. Success! Most importantly, fill in all information of your company on the business profile page and click Update. Success! Don't forget to fill in the organization information and click Update. Success! Complete your products and services listing here so that your range of products is visible, and here is the example of a completed business profile. And we are done. Easy, isn't it? Register as HIP member and accelerate your business with HDC.
Malaysia's digital journey began more than 2 decades ago when MSC Malaysia was set up to transform the country into a knowledge-based economy. Since then, MSC Malaysia has contributed immensely towards the growth of the nation's digital economy. Our next step is to take the digital transformation from the corridor to the world. Introducing Malaysia Digital, a strategic initiative which will empower the rakyat, businesses and foreign investments. Malaysia Digital will also elevate the participation of Malaysians and local businesses in revolutionizing the world's digital economy. Malaysia Digital opens doors for Malaysians by providing equitable access to digital tools, knowledge and income opportunities. It offers new business opportunities and growth through a supportive digital ecosystem. It also provides flexible and agile investment facilitation to make the country investment friendly. The goal is to drive the digital ecosystem and develop the digital economy to a stage where it contributes at least 25.5% of our GDP and creates 500,000 jobs by 2025.
Malaysia Digital will galvanize public-private partnerships to accelerate the growth of our digital economy and drive positive transformation that ultimately benefit the rakyat, businesses, investors, and also the whole nation.
Establishing Malaysia into a digital nation, one with more adept, stronger and resilient economy, society, and governance. stepping into tomorrow's digital future today.
SMEs are the backbone of the Malaysian economy, contributing close to 40% of our nation's GDP. But every day, small and medium businesses struggle to secure Shariah-Compliant financing to grow their halal business or bring their business towards being halal ready. That's why we created Funding Society's Islamic Financing to help businesses of all sizes to thrive and succeed in the halal market. Our Islamic financing solutions are designed to be accessible and convenient, allowing you to apply anytime, anywhere. No collateral required, with faster disbursement process. Through our suite of financing solutions, Microfinancing I, Business Term Financing I, and Invoice Financing I. Together, we can open the doors to halal financing for SMEs and help them achieve their full potential through a supportive and inclusive ecosystem. Enter the halal market with confidence through 100% Shariah-Compliant Financing. Islamic Financing Solutions by Funding Societies.